Today, we're going to be talking about Bitcoin. We're going to be talking about expectations here for a coming massive move on Bitcoin. Not my expectations. Lots of expectations right now where people are looking for what would be a cycle top to come into play. If you look at past cycles and align them, whether from the halving, from the cycle high, we're getting to a point during four-year cycle theory where you'd be looking for that acceleration in price. We're going to take a look at what it would look like for that to happen, what our expectations continue to be. I'm going to start off with this chart over here because this chart is so important. I know it might look like chicken scratch to y'all, so I'm going to break it down and explain it. I'm going to explain why it's so important, what is transpiring here, what it has led to, and how it's going to help us continue forward over here. Everyone, this is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. We do have some positioning to go over as well. We will absolutely get into that. We still have the beautiful dance going on between Cardano short and Ethereum long. Bitcoin, Solana out of the market, still holding T triple Q. Tesla getting ready to exit a position into small profit, and Nvidia taking a small loss this morning. We'll cover it all. Right now, I want to start off with this chart over here. And this chart, many of you will remember, right? This chart led to this tweet over here in January of 2023. And I was talking about the underbelly breakout. This is January 2023. This is right after you saw the blow up of FTX, and many people were extremely bearish, especially on the macro. This is shortly thereafter you saw Michael Burry put out the famous tweet, "Sell." Right. So during this particular point in time, though, what you did see was a major breakout incur, and it's been the breakout of Bitcoin's bull market since. This line over here, I'm going to start off with this line now that I have previous cycle ceiling. It's not the previous cycle high coming back to 2017. This is before the most current halving. It's where price formed that resistance. You can see over here, if I move to a closing basis, that price resistance peaked above shortly and traded shortly above 17,250, and then not too much corn changing hands, and then found that as the resistance. You can see over here after this particular spot, we were live streaming together. This was the summer of 2020, and we called here live, public live stream, the bull market breakout. We had that breakout, what wound up being a retest, and then the bull market ran. Look what happened after it broke above the previous cycle ceiling. Do you see how it came back in and then confirmed that place into support? Prior, it had been resistance. Incredibly important awareness spot. Most people were looking at the previous cycle high. And up until then, Bitcoin had never taken out the previous cycle high. So when people took out the highest price point over here, everyone was like, oh, this time is different. This is extremely bearish. But they didn't realize that this was nothing more than a high price tick where not too much coin over a course of 2 or 3 days, not too much volume. And this was significantly more important. Now, I don't think, oh, by the way, what stands out for me most on this chart was this over here when we called the bull market breakout. And that was fine and that was good, but it's also very late for affirming a bull market breakout, right? Price obviously significantly off its lows. This was before we were together, an Adam and Eve bottom, and then you saw a price break out over here. And I spent a lot of time, and I really wanted to make sure in this coming bull market that we could call the bull market as early as possible. If you go actually to the YouTube channel and you go to the front page, you'll see a video, and it's December 2022. It's weeks before this. And we say the coming bull market breakout. And we pointed to the previous cycle ceiling because we were trading under it. I don't think we need this line over here. So I am going to remove this. I'm going to remove this line over here. This was an important line. I'll keep it there to explain to you in 1 second. Hold on 1 second. Look at those bearish continuation patterns. So what happened over here was a couple of things. I think that this would have been the bottom, and you could see that we had one, two, three touches into the previous cycle ceiling, and it was confirming it once again after the first test of and confirming it into support. We had another test of that support, and then another. And then right over here, I believe this would have been the bull market breakout had it not been for the blow up of FTX. This big candle over here is when you saw the Twitter exchange between Sam and CZ of Binance. And when at first CZ was going to take a look at the books, took a look at the books, and then was like, absolutely not, hard pass. And then you saw the collapse of FTX, and you saw the price of Bitcoin come down and break the previous cycle ceiling. Once it was below, this is when we began looking for the bull market breakout, and we looked for price to rise above. It rose above and it closed above, and then you could see that breakdown. You had to get back on. It's not so easy. Nothing is ever a clear line in the sand, and it takes a lot of work to stay on the right side. As soon as you saw that breakdown, that looks to me like nothing more than another bearish continuation pattern, bearish continuation pattern, bearish continuation pattern. And we have to get short right over here until we go right back above again, 17,250. This was the bull market breakout. And then the first confirmation of that was this trend line break above here. And then we had what was legitimately the first real confirmation was this trend line break. You saw the trend line break, retest, resumption up, and then you ran into March 2023, and it was the regional US banking crisis, and the bull market breakout was in jeopardy. And I have to tell you, the whole time since calling the bull market breakout, all as we've ever done is look for when it's invalidated, because you don't know how long it's going to last, and you have to look for de-risking points. A lot of people like to look for when is the top of the bull market. A lot of people would really love CTM for us to see some type of massive price appreciation in the very short term, and we'll look at some awareness points, and then all season to kick off, except that the cycle hasn't even begun in so much as that Fed is still tightening. Quantitative rates are extremely elevated. You're still looking at quantitative tightening continuing to run, albeit at a reduced pace. It's still tightening. The bull of all bulls and monetary policy are not aligned yet. I don't think we're going to see any type of alt season occurring, as you're seeing U.S. consumer, lots of pressure still put on them. Anyway, we're not going to get into that right now. We'll get into that a little later, telling the story of the breakout. And then, so anyway, main takeaway, main point of this chart was this chart, and seeing where could we be as early as possible. How do we get to the beginning of the bull market rate up? Because look at this, the difference between price to the cycle peak, right? Compared to getting from the last confirmation of the bull market breakout as to as early as possible is significantly different. And we want to, as the days and weeks and months and years go by, to become better and better, sharper and sharper. And that is where we are right now. So we've been talking about right now a lot of people looking for that accelerated price behavior, taking us into the cycle top. Let's look at a couple of different um, potential price projections if you're going off of cycle theory. 4-year cycle theory, every 4 years, the miner's reward is cut in half. This has been throughout Bitcoin's history a major catalyst for price appreciation. However, things changed this current cycle. Obviously, price made a new all time high before the halving. What is changing is the market dynamics and the adoption rate. Did you see today that JP Morgan said that they are going to allow people to take out loans against their IBIT holdings? Wall Street and the institutional adoption continues at a rapid acceleration, looking for the next domino to tip over, which is nation state FOMO. We know that El Salvador is here. We know that they continue to stack in the face of the IMF, trying to pressure them not to. But we also know that we have not seen any acknowledged stacking coming from a G7 nation. And that eventually is going to tip over and the next domino is going to fall. Anyway, I'm lining cycles up over here from their all-time high. And what's interesting about doing it from that vantage point is you notice that all three cycles bottomed in the same area. That's pretty interesting. That's pretty neat. You could say that, well, also, and I wasn't sure this was going to happen. So far, all three cycles are converging in this red box. Just going back into April, as Bitcoin was undergoing a 30% correction, it did not look likely that it was going to make its target. Here we are, though, once again, and currently in sync and on time. Now, is that going to continue? A lot of people are looking for momentarily a lot of sharp price appreciation. They're looking for some people, not everyone. Most general people. What kind of term is that? General people. It seems to me a common theme for what price expectations for this year in 2025. A lot of people would not be surprised if they were to see $200,000 Bitcoin. Why I think that's a possibility. I also think that what happens specifically in the US, do we start seeing a sharp turn in the hard data? We saw this morning a potential warning shot about the US jobs market with ADP payrolls coming in well under estimations. What was it? 37,000 jobs created. We'll take a harder look later. Obviously, Friday's non-farm payrolls is more important. Are we going to get another miss like last month on ADP, and then all of a sudden non-farm payroll come in very strong? Are we going to or are we going to see a big warning shock that is going to cause the Fed to have to rethink these all these questions are unknown and things that we continue to monitor. But point being is if we begin to see a deterioration of the hard data in the US, that could be the fall off of the consumer, obviously a weakening job market. We could see GDP start to come down. We could see earnings from US companies begin to come down. And all of these things would lead to pressure on risk assets in the near term. And Bitcoin over the next 6 to 9 months could easily wind up being in correction. A lot of people think that the April low we saw in the US stock markets when Nasdaq corrected 30% is the low. It's not going to be retested. And that could very well be correct. We could see some things that ignite this rally. We could see in the coming weeks a lot of trade deals worked out and the market feel that a lot of the uncertainty is actually not as bad as once thought it could be. Or we could see that actually a lot of these countries have a really difficult time coming to any type of agreement. We could see the president of the United States, who initiated this, forced to actually double down. And yes, it is a non-zero chance that the April lows could be challenged and or taken out. And if that were to happen, Bitcoin would not be immune. Bitcoin could undergo correction for sure. Now, I think all of that would likely hasten the timeline until we see monetary policy actually aligned with Bitcoin. And I do think looking out 12 months from now, that likely Bitcoin and risk is higher than it is today. However, between now and then, there's a lot of uncertainty. I don't know that Bitcoin won't reach 200,000 in this year or that it will, but outside of something like the Bitcoin Act being passed, and that doesn't look like that there's even a it doesn't look like there's a high probability that the Bitcoin Act is going to be passed anytime soon. If that were to happen, that's something that could cause and would likely cause a really strong reaction in the price appreciation of Bitcoin. And that's something that would also likely ignite the next stage of adoption, which would be on a larger scale, and nation states would have no choice but to follow suit. Now that's a possibility. I don't think it's a probability, but I think it's a possibility. Gemma, thanks for jumping in here. Great to see you. Thanks for hitting the like button. Do appreciate that very much. Anyone that has the opportunity here to go ahead and smash that like button, please do. Trump is saying buy today. I haven't seen that yet, Jay Cora. That would be interesting if he did. Trump did say buy, obviously, at the April bottom. He also did that in December 2018. He's got a pretty strong track record of letting everyone know when it's a good time to step in, buy. Simon, I don't think that the normal cycle timing is delayed, but I'm gonna kind of highlight that so we could pick up on that. So this is what a lot of people could be expecting into September, right? And is this a normal time for Bitcoin to be like historically, are the summer months bullish for Bitcoin? Actually, no, they're not. Off like June and July are really not bullish for Bitcoin. Off the top of my head, and I stand by that. So seasonalities would suggest this is not the best time for Bitcoin. However, just again, this rhyming of past cycle behavior since the top would suggest that these next 3 months would be a very, very bullish time for Bitcoin. You could look at it this way as well. And this is lining up things up more along the lines of from the halving instead of the nice symmetry that I'm showing from the cycle top. I mean, I could say that they all bottomed here. And since up until this point, there is a strong correlation, a very strong correlation. I could line them up from the halving. I say, well, there's not a very strong correlation whatsoever until here now. Now the medium 4-year cycle, this current cycle has reached the mean of the previous cycles. But up until this point, they were really not. This cycle is more accurately aligned from the cycle top, in my opinion, and how long that lasts, well, that's anyone's guess. But what I'm trying to point out over here is this would suggest that coming into the end of the year and October, November, December, historically, those are very bullish seasonalities for Bitcoin's price. And I would think that there's a higher probability of seeing more favorable price action into the end of the year. And anyway, I guess I'm just trying to I'm trying to subdue any type of expectations of in the near term over the summer into September of price peaking. I do not see that happening. I could easily see Bitcoin following U.S. equity markets, and if they come under pressure, also, of course, being under pressure. And just pointing out again that during this most recent April correction in U.S. equity markets, the ratio of Bitcoin's pullback compared to the U.S. equity markets was very, very bullish. It was about a 1-to-1 ratio. Nasdaq pulled back 30%. So did Bitcoin. In the past, you see the Nasdaq pull back 30%. Bitcoin's pulling back much more than that. That was extremely, extremely bullish. If you remember this, we've looked at this together, and especially during the bear market, and this was a much later affirmation and confirmation of the bull market breakout. just a couple of awareness points and where we could potentially be coming into some resistance. Cycle top, $140,000. If Bitcoin is able to this year make a leg up, the next leg up towards 130, $150,000, a lot of people will be looking for it. I'm more interested in what I continue to watch, as I mentioned earlier, is where the breakdown occurs. We looked and we saw how could you be as early as possible on the bull market breakout? 17,250. I mean, earlier than anyone I know out there. Earlier and more accurate than anyone I know out there. But that's meaningless unless you get the breakdown correct as well. So we continue to watch, and I've watched for when that bull market were to break down the whole entire way. And there's been a lot of points where it's kind of a little iffy. I have this over here, and this is the channel that we're currently trading within, and I call it the sustainable channel. And it reminds me of this area over here in 2016. And the longer Bitcoin could trade within this channel, the more sustainable and long lasting the potential move can be. If at any point we break out to the upside, then likely we are entering into an accelerated price zone, and likely that's coming to an end soon. If we break down, if it's a financial crisis, if it has something to do with the financial system that's going to cause the Fed to have to come in, like happened in 2020, then likely it's going to be sharp and we're going to be coming strong out of it, right? The drawdown will likely wreck a lot of people who are obviously trading on leverage and or don't have the awareness to understand that likely the recovery out is going to be sharp and a lot quicker because they're thinking Bitcoin is going to zero. They're going to be selling their Bitcoin. It could be very dangerous. Now, if it's not because of something that has to do with the financial system, and it has to do with the macro, and it has to do with a weakening U.S. economy, the Fed is not going to rush in to be the savior. They're going to allow those healthy business cycle dynamics to play out. China is a perfect example. Since late 2021, for the last 3 years, 4 years, China's been in a slow motion deflationary train wreck, and the authorities come in every once in a while and they give just enough liquidity to keep everything going, but they're not looking to come in and pump it up. Unless the system's breaking, the central bank is not going to come in and be the lender of last resort. That's what the central bank is there for, and if needed, they'll inflate the system to keep it going. But otherwise, for them, the best thing that could happen would be, I'm going to just call it a reversion to the mean. And if that's happening and you get a technical breakdown of this line over here, the lower line, and there's no immediate need to address the situation, remember the things like after the dot-com bubble, it took years to get the economy going again. And then right after the great financial crisis, once again, and it could be longer lasting. Now, I don't think if all this is occurring that the drawdown on Bitcoin is going to be, and it's very hard to put a number on that. I'm going to say, listen, we'll call anything greater than 60% that we've entered into a bear market, regardless of price tops here, regardless of price tops at 200,000, 150,000. If you get in between greater than a 60% drawdown, I'm going to say that, well, that was a bear market, and we'll see how long it lasts, right? Generally, bear markets in Bitcoin have lasted 1 year, 1 year over here, 1 year over here. Could we get between, like, if the current dynamics that I'm describing were to take place, could we get something like a 3 to 9 month period where Bitcoin comes off 40, 50%, 55 up to 60%? Yeah, that's entirely possible. That's what I think what would happen out of that. And I think that would show a really strongly changing dynamic in Bitcoin. If you're not getting that massive 70, 80% drawdown in the bear market, and it's shorter lasting than previous bear markets, it shows an incredibly changing dynamic. Another dynamic was obviously the all-time high occurring before the halving. And just to give you some type of projections of what I foresee happening, is I'm looking at over to the next halving, right? We talk about the 4-year cycle in Bitcoin, because the 4-year cycle has been instrumental in the price appreciation in Bitcoin after the halving. What I foresee happening is Bitcoin over here looking at the next coming halving, the 2028 halving. It's supposed to be April, May, depends on how 200 every 210,000 blocks. What I foresee happening would be Bitcoin trading higher than it had prior, right? Whatever, like if we were going to some type of correction between now and let's call it 2026. Like ultimately, as we get closer to that 2008 having, I expect Pricer to be higher than it was. So a lot of people looking for that, what they called left translated cycle. I think that's way off. We're pretty far past like this is where Bitcoin has peaked prior, right? Coming into that area. Actually, just let's check how many days we are past the having, and let's call that 500 days. All right, let's call this one. So I'm gonna go 345, and then so 549, right? This is the high November. So yeah, 500 days, 550 days, and right now we are 414. 500 days puts us in through September, and then 500, and I'll go all the way to December, since we know that's when seasonalities really are strong for Bitcoin. 600. So could we call this a left translated cycle if it's basically within the mean of how many days Bitcoin has peaked in relation to past cycles? Absolutely not. And a lot of people thought that that's what's going to happen. They saw Bitcoin peaking early, or I'm sorry, making a new all-time early, and they were like, it's going to be a left translated cycle. And we're like, no. And obviously that's wrong. All right. So is Bitcoin going to peak over here? Is it going to peak much later? We'll find that out afterwards. Looks like a huge accumulation cylinders, right? And you have to watch when they break to the upside. I would prefer we don't break out to the upside for as long as possible. And another thing to note is the duration of how long they took. Let's look at this. Do I go from the bottom here or the bottom here? I'm going to go in the middle between them two, because I don't know which is authentic. I don't know which is correct, but I see like a trend line break right over here. So I'll go from here, and then this is like where we broke out to the upside of the cylinder. So roughly little less than 700 days. Let's see where we are now. 931 days, and we have yet broken out. What does that suggest to me? Well, let me show you one other thing over here. Look over here. After you broke out above the 0.786 retracement fib. By the way, Jay Cora, did you confirm that Trump said buy? I'm curious. Markets have been utterly relentless in sellers not able to gain any type of follow through whatsoever. If Trump is indeed signaling, or that he believes it's time to buy, maybe he thinks, or maybe he knows that some trade deals are about to come through in the way. Sorry, I'm just taking a breath here, and then we'll continue as we go. All right. Everyone's background. Are you schooled, self-taught? What's go CTM trained? I think most people here are CTM trained, having been with CTM ever since we began our journey together out in early 2020. Um, so another thing that really this reminds me of is the consolidation over here, which took 120 days, more or less 120, 150 days. And this was the other times Bitcoin broke above the 0.786 retracement fib. It was no consolidation, sharp move up. No consolidation, sharp move up. The time that it had the consolidation, 120, 150 days, you saw a massive bull market. This time, instead of 120 days, the consolidation has been either double the length, or I could argue that since we're not moving up in an accelerated behavior, even longer. Either which way, it suggests to me the one third so far, the length of this cylinder here, that the length and magnitude of the bull market is going to be substantial. D Power, I agree with you. I love it. D Power, I agree with you a lot. A lot. Coming into the White House and and telling Trump that he always chickens out, that's going to cause him to actually have no choice but to come in hard. So this is a great question. Quantitative finance, computer finance. So I never met a PhD outside of Renaissance Technologies, right? And 100 PhDs working for him. I was gonna say Jim Rogers. Jim who? Um, we like what CTM is all about is, and at first it was our discretionary TA and cycle awareness, and amazing how early we were and how able to spot trends before they happen, continually staying on the right side of market. It's unbelievable. I get it just takes a lot of work keeping your head down. And then when we didn't see the cycle peak blow off top in 2021, said, you know what? We're no longer going to follow Bitcoin's 4-year cycle. We'll keep a like we'll still do our best to be ahead of it, sharper than anyone else out there. And again, I mean, we got no one else called that bull market breakout there. No one else called that bull market breakout as earlier. Our awareness was absolutely pristine and continues to be throughout this. Now you're starting to see a lot more calls for Bitcoin cycle length to be a lot longer very early on this and all of this. But when it comes down to it, what CTM is all about is our execution in markets. And our execution is all through mechanical strategies here, the CTM that we've built together without any quantitative finance train. They don't teach this in schools. They don't. It's whether you're talking stocks, right? And you could see obviously the returns, 728% coming back here over the last 5 years. Look at the drawdowns, 5-year return. Obviously, you don't see anything like this built by anyone inside quantitative analysis. And then you can see the same thing occurring here across our Bitcoin and uh and crypto strategies as well. So yeah, CTM over. I mean, listen, I don't know. How many of you have kids today? And we have a bunch. And I suppose if they need to go to university today, then they'll need to go and get a degree to help them to find a job. But the ability for anyone to learn anything today online and at a higher level, I mean, that's what I would hope for them. I would hope that they're able to learn, execute, and build. But we'll find out. Um, Underbelly inside the Discord. under the Nuggets channel where Nuggets a clip. This it's pinned to the channel and it's the second to last post, I believe, and it's on what the underbelly is. That's it's a clip we took from a recent live stream, walking back and explaining what actually an underbelly is. Um, back to our positioning anyway. We see that we're currently hedged. Ethereum is long on the market, and Cardano's holding an open short on the market. We saw over here as well that IBIT continues to hold its trade. FNGU ticker symbol change expected to take place the 24th of June this month. Tesla getting ready to lock in and close this position, right? The green line is the P&L. The blue line is the high watermark of an intra-trade, not on a closing basis. And you can see that we're getting ready to close the trade here. NVIDIA stopped out this morning, and TQQQ continues to hold right now in the market. Um, Quantitative analysis. Dude, did you study quantitative finance in school? What did the professor teach you? Oh, okay. So anyway, Bitcoin bull runs still in the market, and momentum is still at a place where it could continue to kick and pull up. We looked at yesterday, so we're not going to do it today. Our Carmen V3 and V4 templates, and you could see that their positions relatively same, except that while Ethereum was late on this entry compared to our V2, it's still in the market. So that is our changing in positioning. Did I call it? Well, w- could you find that for me? Because why I thought Bitcoin would. Well, let's go back. There's a video on the YouTube channel, and was it late 2019? Bitcoin is trading $7,000-8,000. And I said that it's going to come in the next bull market and trade as high as 55 to 130,000. People thought I was crazy. I after 2020, after December 2020, I adjusted that when I saw the magnitude of the move, and I said, you know what? I think we're gonna break diminishing returns. I think we're gonna trade above $180,000. I think that because of now, I had no idea that things were going to transpire. I had no idea that Scammy Sam was going to go ahead and get a 20-year prison sentence for selling Bitcoin he didn't have and suppressing price. I didn't, but I did say that the greatest risk to the bull market was not Tether, was not the only thing. The greatest risk to the Bitcoin's bull market was going to be the Fed and the Federal Reserve policy. And I said that early in 2020, 2021. And then I remember my tweet, October 16th, 2021. And I said, as the Fed is pivoting its policy and they're moving towards tapering, 2022 is going to be a rate shock, and Bitcoin is not immune. Now, your favorite macro follow had no idea that in 2022 we were going to see a rate shock. Did they? Did we? Look at rates now. Fastest rate cycle, hiking cycle in history. Now, in Bitcoin, that was October. November, it peaks. We call the technical breakdown of $53,140 in real time. Bitcoin, I'm not like deleverage down, de-risk down. I'm not selling my Bitcoin, but all trading. It's time to go ahead and de-risk down and exit. I don't know anyone else who from the very beginning throughout the cycle that was calling a de-risk level down at 53,140. I don't. So if my expectation were that Bitcoin was going to originally peak between 55 and 130 and then adjusted, it's going to break diminishing returns. And if I could give my best assessment of what price would be, 230,000, 240,000, right? Of my best best expectation of where the cycle. People now, I hear people telling me I said 400,000 and whatever ridiculous. That's just not what happened, right? And but that's the difference here though is it doesn't matter what you think. It matters when you see the breakdown. When you see the breakdown, that's what matters. Now, a lot of people, they're not able to pivot on a dime. A lot of people, they have expectations, they have hopes, they have desires, and then when reality suggests something different, they're not able to go ahead and adjust their expectations. And well, I mean, listen, I don't know what to tell you, but that's not what happened. Um, and I'm not giving any expectations on the upside for this cycle. My only expectation is that price is going to peak much closer to the 2028 having than the 2024. That's number one. Number two, I called the bull market breakout at the lowest price and the earliest that I've seen across the space. And I will call the breakdown when I see it. We came close to what could be a little bit of a breakdown over here. We had this, what now looks like a liquidity grab and expectations on the breakdown. It could have came into that pocket. It was a little above, but it was reclaimed. Now this channel over here is a little steeper, right? This is this is the invalidation if it were to occur at any time. It's still going. Was still I'm not calling any type of major de-risk level. I did call, and you can find the tweet, and I know it was way earlier than everyone, but over here at $94,000 back in February, I said if we break that level, then the drawdown is going to be much greater and the time to recover much longer. Well, what happened? Well, price drew down twice as much from 15 to 30%, and it took February until May to recover. Now, my expectation were that if we hold that level, price is going to make the next leg up. That didn't happen. De-risk level. This is not a de-risk level of the bull market. This was just a near-term de-risk level. So if it's easy for you to have some type of idea of like this is what I believe is going to happen, and if it doesn't happen, I that's not how I operate in markets. I'm very fluid, and each day, as more and more data comes into the market, obviously as a technical analysis, I use price to let me know and maneuver around that data. As a macro analyst, I take in all of the high impact news events. I take in all central bank activity. I take I take in all financial market dynamics, and I put all those pieces together. So there we are. Not everyone, like, I get it. Markets are incredibly difficult. Not everyone has what it takes to be able to do it. But what we're trying to do here, what I'm trying to do here, what we're in the process of doing here is not only as we're seeing monetary reset occur. Do you remember it early on when I told you that like monetary reset is upon us? Like what you're seeing happening now is should be very clear to all of you. It's not clear to all of those around you yet, but it's a lot more clearer. A lot more people that I associate with are like, wait a second, could you explain to me gold? Could you explain to me Bitcoin? And 5 years ago, that like that those conversations could not be had. Now they happen a lot more often with a lot more frequency. Uh, and what we're doing here is looking not only to survive this monetary reset, but also to thrive. I was looking, and I'm sure you, and I hope all of you have been looking at uh, the BVOL, the volatility of Bitcoin, and you can notice that ever since the summer of 2022, the volatility is substantially diminished. We see it in our overall trading returns. The volatility is substantially diminished. Do you think that this is going to stay low, go lower, or increase? You could see it on the CAGR of Bitcoin as well. There's the exact same point over here. Since 2022, you could see this is the 4-year CAGR of Bitcoin, and you could see that it is coming down over here, right? I guess the 3-year CAGR might be even worse. I'm not sure, but 4-year, 5-year CAGR, is that going to continue? I look at people like, how do you retire on Bitcoin? And we're looking at Mark Moss's retire off Bitcoin calculator. And first of all, I think this should be done with Bitcoin. I think this should be done also with equities, and I think that you should never put all your biscuits in a basket, eggs in one basket, and have multiple strategies to achieve what you want. But the one thing that is an unknown over here is what the future gain of Bitcoin is going to be. For example, in 2025, we're seeing that we're looking at 100% gain. I I mean, is it possible that Bitcoin trades and ends the year at 180,000? Of course. Is it possible that hard data cracks in the US and trade deal turmoil actually escalates, and that's not even close? Absolutely. It's very difficult to make some type of assumption of what the future return of Bitcoin is going to be. And I think that a lot of people have actually, when they thought what the returns were going to, a lot of people are very off, very off. I was looking at yesterday. It's a great follow for a long time. I think it's called BTC Cycles on Twitter, on X, formerly known as Twitter, and he's talking about how off his price at halving, price at the bear market low, price at the cycle high has been over and over again, because most people's projections are off. But rather than having to rely on what you believe will happen in the future, because the future is unknown and nobody knows what is going to happen, it makes a lot more sense to figure out a way to be able to navigate markets and produce calculated returns that are going to help you reach your goal. That's what we do here. Well, I love this. I always say, conquer thyself. And it's a process that takes a lot of work and a lot of time. But this is going to continue. The currency debasement over the past decade, and I try to tell people when they ask me about gold, when they ask me about Bitcoin, I try to tell them, listen, if you have $100,000 today, in 10 years, do you think that $100,000 is going to be able to buy more or less than it can today? And each and every time they firmly agree that the purchasing power of that money of fiat is going to be worth much, much less. I try to explain to them that with Bitcoin, it's the opposite. That with Bitcoin, the expectation is for it not only to hold that purchasing power, but to increase actually in purchasing power. Now, the same thing with gold. However, gold is the largest asset in the world, currently $22 trillion asset class. It is obviously, and I called in March 2023 the gold super cycle, as it broke out of the decade cup and handle pattern. And we talked about, you know, look, the first target's 2,500. It's not stopping there. I'll see you at 5,000. And as we get close to 5,000, we'll continue to reevaluate where we are. But Bitcoin, only a $2 trillion asset class, it is headed and going to take a significant share of gold's market cap. And as it does, its price appreciation is going to be much greater. Bonds here going a little bit bid on the weakening US data we saw over today. That, let me just refresh it so we could see. Bum bum bum. ADP non-farm, 37,000 jobs added instead of 111,000 as expected. Non-farm payroll, a low bar set, 132. Let's find out and see what expectations have been of late. So lately market's been beating expectations. Low bar set, get the beat. Is that where it's going to see, or are we in for further weakening data? So, Jeff, thank you for the reminder. In so much as that the bullish case for Bitcoin is dependent on two things. It's dependent on the continued debasement, which seems to be a mathematical certainty. The only way to keep a debt-based system going is to create more debt and therefore further debase the underlying. Now, the other bullish case for Bitcoin is dependent on the adoption. And we continue to see the adoption rate increase dramatically. A lot of people worried right now as they see there are billions and billions of dollars of Bitcoin being purchased regularly by these corporations, and the price is not going anywhere. What's going on? And of course, it's frustrating. And if you look, and I could just let me just go ahead and point you to. I just posted the chart on the Twitter. If you look, um, maybe we could just go like this. All right. It's hard to see how this happens when huge billions of dollars are so easily facilitated over the counter. Do you see this changing? Right. And if you look at, of course, it's frustrating to see so much coin from larger wallets being distributed. And largely since 2017, you could see all of the distribution taking place. But the thing is that longer term, it's very healthy, this type of rotation. These people, these larger wallets, they've been accumulating from the inception of Bitcoin all the way to price roughly being around $700, $800, right? That 2016, 2017 massive breakout. And yeah, eventually the amount of corn that's available in the OTC markets is eventually going to come to more of an equilibrium. Right now, there seems to be an abundant amount of OTC coin available, assuming that we're not seeing paper Bitcoin being sold. Michael Saylor, he's against giving proof of reserves. Jack Mahler suggests that 21 is going to be open to it. Jack Mahler told you that your Bitcoin that you use to put up to lend will not be rehypothecated just last week in Vegas. Yesterday, they changed their terms of service, and your Bitcoin can be rehypothecated. Don't trust, verify. We don't know that there's no paper Bitcoin being sold. I do know that in the gold market, there's been a tremendous amount of paper Bitcoin suppressing the price. There's been lawsuits and millions and hundreds of $1 million of fines for the manipulation that took place. I look now after that frustrating decade of gold price being suppressed and the gold bull run has begun. In the end of the day, Bitcoin is going to do Bitcoin things, but it is continued on the further adoption of Bitcoin. And we continue to see that adoption headed in the right direction. There's no cause for concern about the adoption of Bitcoin at this current point in time coming to a point or drying up. We're seeing it accelerate, right? Now we always have to continue to watch that. That's one of the bullish cases for Bitcoin is not only the devaluation of the fiat, but it also has to be the continued adoption. Circle's IPO, from what I understand, is expected to be oversold. I believe Kathy Wood and BlackRock are going to be big takers. All right, everyone. A great session to be here with all of you. I hope you enjoyed talking about Bitcoin. I know that I enjoy being here with you. Have a beautiful day, everyone. God bless you. I'll see you all back now on the inside.